Eric Muathe, Muathe.com, with a brief market update video, and it is end of August 2017, today being August 31st. Now let me give you a snapshot of the market, and I'll explain in this video why I haven't been pounding the tables for us to be bullish. I'll give you my reasons why. I could be wrong, and I do acknowledge that's part of trading, but I'll give you why I think around here you just have to be a little bit, just let the market come in, see whether there's a trap here for those going long. We shall see, or maybe a great buying opportunities. That's always the question, and I'll explain why also, as I pointed out in a premium tweet 2 days ago, why gold has yet to really convince me that there's an upside. And maybe I shall touch on a little bit on crude oil, which is up slightly today, actually up about 3%. So we'll discuss the markets. So we'll discuss the markets here, and discuss gold, and discuss crude oil, and even the dollar. All right, let's get to it. The first impressive thing is now I can say from the way I look at the market that technically speaking, the NASDAQ has come back to test its previous highs. In fact, it's not testing the recent all-time weekly closing high. It is actually right now moving above that threshold. The number there is 6387.75. Now, in the short term, this dictates momentum. As long as the NASDAQ is above this number, then that's a quality breakout for the market. So just keep that in mind, irrespective of anybody's opinion, including mine. If the market is breaking out above that price, that's a good breakout. Go back to the RSI support line we had drawn a couple weeks ago, and now we can see why the market held there. Obviously, there was a reason for that. The market is coming back to test the breakout. Now, if it fails to hold above that number, then that's a reason to suspect that there is a pullback around the corner. We take a look at the daily for the NASDAQ and go back to the lines we had drawn a couple weeks ago. There were two lines, one this line here, and we did touch this level nicely. Market's higher since, and there's another line going back to the lows of 2016, and this line should be somewhere around there. Even this line did find support. Of course, the market has bounced since then. Now, if that support was good enough for the market, now the question becomes, what next? And I'll show you a line to consider, and that's why I'm saying personally, I'll just kind of let this play out. But the NASDAQ is interestingly coming back to test this level here. Failure to move above this level does suggest that we can start suspecting around here. It doesn't have to be like this moment, but we start suspecting that around here, it's only logical that there could be a pullback if this is confirmed as resistance. So day to day, we have to wait for that. Sometimes these things take days to play out. Let's take a look at the Dow. And on the Dow weekly, the Dow has yet to break out. And let me share with you the number to watch. So for future reference, the current all-time confirmed high going back to, I believe, was July. The level to watch there for the Dow, the bulls would need to break out, move the Dow beyond 22,092.81. So anything above that would also be a quality breakout. Also, we need to watch the Dow as it comes close to moving above 69.1. That would also be a big deal. Now, early in the session, we were trading slightly above it. So let's watch this number. The more the Dow is above 69.1, that might suggest that we are back to this level here, or this type of market situation where the Dow moves above 69.1 and we get this explosive move in the market over a period of weeks. So it's a big deal if the Dow is above 69.1 or not. Right now, it is not above that threshold. Now, we also know that visually, for long-term perspective, the Dow should be remaining in a sideways to bullish market on the weekly, as long as it is above this line here. So that one we can see visually. We would need a major break below this trend line for there to be, you know, the look that the market is due for a major correction. Now, let me share with you why personally right now I am not convinced that we necessarily have to be moving higher, and I'll show you a series of hourly charts. Let's begin with the Dow hourly, and this chart should be to the left under the menu tree. So I've seen this look all morning. It's a simple line on the Dow. What it does, it gives us the break here of the highs, uniform activity rejection of those intraday highs, and as of right now we hit that as of the morning highs, and we have not moved above that. So that's the Dow hourly. And if we take a look at the 30-minute chart for the Dow, there's a line that should be something like that, and also we have similar considerations here, a break of those highs, double top rejection here of those highs, and also here was a short-term high, and now we hit that as of morning highs, and we are still below that line. There's also another line that goes back to the break. So this is the reason why I do have breakout ideas. It's just that I don't want to give you those breakout ideas when I see these types of resistance levels, because they could be running into short-term resistance. So the Dow would have to clear this line also, which was the break of the highs. We break down here off that high, and now we are coming back to test that. As of morning highs, we hit that level and we were rejected. So that seems like a short-term resistance area we need to pay attention to. Let's take a look at other hourly charts that look similar. For example, take a look at the IYR hourly, and here you can see that it is well defined resistance. So in fact, we can say that there's an improvement in prices, but the RSI is making a lower high with resistance on this line, which has been a problem for this instrument. Take a look at the XHB, the home builders ETF. There's a line connecting RSI highs. As of right now, we have been rejected at the highs of the session, and sometimes this does take a while to play out. In our minds, it seems to take forever, but as far as the market is concerned, it is just coming back to test the top side. And there's also another line, if you draw it like, let me change colors there so as to make it clear what I'm doing here. So there was a break here. So this trend line break brings the IYR off recent highs, and now as of the morning highs, we've hit that same line and we've been rejected. So those two lines do offer a visual resistance, and as long as we see that, we cannot be necessarily assuming the market cannot stall. Take a look at the triple Qs on the hourly, and on the hourly here there's a line, as we've seen with other charts, a backtest line, and what this gives us is the break there of that movement, reversal, uniform activity above the line and back below it for the high there intraday, and now we are back to test that level. So the more this is confirmed as resistance, the more it could suggest that we should start expecting a pullback of some sorts. Now keep in mind, on the hourly here, as long as the hourly is above 69.1, then the benefit of the doubt still remains for potential resistance. But if we drift back below 69.1 with the confirmed resistance there, that's going to be a good tell. Now also we can see that this is the movement of the highs with the RSI 69.1 rejection, and just for the sake of understanding this, we are an improvement in prices with declining strength. So that negative divergence ultimately led to this pullback. So what we've done is pretty much come back to test the highs right here. So depending on how the next couple of hours go, if this is also uniform activity rejection, then we can expect around current levels there to be some type of a pullback, and also coming back to test this level here is one we can watch, because this was the resistance level, and now we are coming back to test it. In other words, it seems like around here we should be very vigilant not to be assuming that the market has only one option, which is higher. Take a look at the semiconductor index, and for the semiconductor index there's a line connecting RSI highs. So connecting that high there, that high, and now back to test that level there. So confirmation of resistance here would be suggesting that we've seen a nice recovery, but short term the equation is potentially forcing markets to pull back. So that's one thing that also is giving me pause. Take a look at the Canadian market, and what we have here is you have to go back. This is 9 months hourly. You have to go back to this break off the highs, and the market is telling us that this was the decisive break that brought the Canadian market off 2017 highs. So we take that information and draw a straight line, and you can see as of right now we've come back to this particular level for potential either breakout or resistance. So we don't know which one the market is going to pick, but we can see visually this has been levels where market has struggled to hold above current levels. Whenever we come back to test this blue line, all these have been short-term reversal areas. In other words, if you are looking to buy something at that particular point, you'd want to wait for an entry level. In other words, if you're going to buy a stock XYZ and you see that the market is coming back to test all these resistance levels here, like right now, you just gotta give whatever you're gonna buy the stock, give it some room. Maybe it's gonna pull back and give you a better entry point, is all I am saying. I'm not saying we should turn bearish, but at current levels you just want to hold off from chasing the market, is my point. And on the FTSE hourly, go back about 6 months, there's a line connecting RSI highs. So the FTSE has come back to test this line. It would need to break out decisively above this resistance line if there's going to be more upside. So what I'm trying to do here is borrow from other markets to see where the energies are seemingly coming, and we can see that there seems to be a theme across many sectors and markets that I'm following that are showing potential for resistance here. So no need to chase. We can always buy the same stocks we would have an interest in, but probably more than likely, if resistance is confirmed here, then more than likely we get those same instruments at slightly lower prices. Now, I did promise to talk about crude oil. It's going to be a brief observation, pretty much a follow-up from my recent observations in crude oil. And this is a WTIC. Take a look at the long-term monthly chart, and what you're going to see is that we are still showing on the monthly. This is going to take a long time to resolve, but we can see we still continue showing this resistance line on the crude oil index, suggesting that until it moves above this line, this is a market that should still continue to be sideways to bearish. All right, now take a look at the USO, which is, we see crude oil is up about 3%, 2.75% for the day, but on the hourly for the USO, to be consistent with the US markets charts, there's a line right now that it is coming back to test that line. It would need to break out if it is going to see higher prices, or it shows resistance with the other charts we've seen and we see a short-term pullback. I'm not saying you trade on this, I'm just showing you what I see right now. As far as gold is concerned, I'll actually not even talk about the gold chart itself. I'll talk about the FXC and the dollar, because I think that's the controlling factor here. Go back to my comments, and we have to be really respectful, not respectful, but we have to be aware of this line here. As we come close to the end of the month, this is a big deal. Month to month, this could actually be where it stalls, or the FXC stalls. Keep in mind, if you did not pay attention here, you went through a major correction, resistance here, you went through a major pullback on far as the euro is concerned, and we are coming back here. It's a huge question mark, and I don't want to get ahead of this one or try to assume I know which one it's going to go. But either we get a breakout above that line, which would be bullish for gold, or we get confirmation of resistance, which would be bearish for gold. And we're just gonna have to wait for that to play out. Take a look at the dollar, and I'm gonna use the UUP. And again, here, similar type situation. This is where the dollar had moved above a certain range. We're gonna take that information that the market is telling us that this is where the dollar changed from going down over a period of many years to suddenly this huge run up. So it all began with this breakout there, and as of right now we are still within testing that line. Are we gonna fail, or are we gonna find support on this blue line month to month and start a recovery? And again, that's a huge question mark, and the market is not giving us answers as of right now. Don't forget the big picture in the US market continues to be sideways to bullish. Why? Because the S&P 500, the NASDAQ and the Dow continue to hold above RSI 69.1. So at the end of the day, as long as we are above 69.1, US markets are sideways to bullish. The one thing you don't want to be doing is buying during this short-term picks, because you're just going to run into frustrating situations where the instruments you buy are just going to be pulling back. So that's it for now. I'll keep you guys posted as ideas come across. We shall see whether this is true resistance based on the hourly chart conversation we've had in this video. Just something to watch, but I would not be chasing until we see either a decisive break above the resistance lines on the hourly, or this market shows confirmation and pulls back. Eric Muathe at Muathe.com. And just before I go, let's see what the markets are doing. Still showing a gain for the day, but we shall see how we're gonna close. As always, good luck, peace, and blessings. EACS.